Good morning, my friends, and welcome to the Breakfast Club, Friday, February 9th, 2024. Well, interesting little bit of information happened on the old political front there last night. I feel bad for Joe Biden. I do. I feel bad for the guy. He should have just kept walking off the stage there. Don't go back. So it all kind of fell apart for him the moment he went back on stage and started answering questions off script. Poor guy. Well, we'll see what happens in the markets today. Expect a little volatility, I think, today. Good morning, Kirk. Kirk, and NQ for the win. Stay with NQ, Darren. Don't go away. Stay with NQ. All right. Let us have a look. Young Kirk and I. Seven o'clock, 7:06. Next minute or so, we might see a reversal happening here. It's the time for it. I'm trying to drink a lot of water today, so hopefully you won't hear me clear my throat 100 times. That's that coffee, it does it to me. All right, let's see what we got here. How you doing this morning, Kirk? Let us show the I was kind of hoping I could find the my computer must have restarted last night. All right, we'll talk. World Cup 2024 standings. All right, here's the World Cup standings, folks. We have Eugene Denisenko still, 142. He must be sitting on the sidelines. He hasn't moved. Kelly Wallace has moved a little bit. Matthew Miller hasn't done much. They've been stuck there. Adam Kahn. I can't go down to any further on the list than that. Patrick Nell, our beloved Darren Hill from England has now fallen off the top 5. He must be just below there. And the 4th place guy from Canada, he has dropped. Patrick's dropped. Li Fang. Li Fang Xian. 39%, hey? Okay, well, that's the standings right now this morning, folks. Stay tuned. It's only just begun, as the song says. All right. Techmilla, hello. How are you doing today, my friend? How are you doing? We're getting turns. Now we have the squabbling sisters. Oh yeah, let's look at the Forex Factory. Put all these tabs back up on my screen here. Filter. Back to this order block here on the hourly. This could be a continuation to the upside. I'm hoping this is, I'm looking for 18 or 17,855 down here. Return to order block. That looks like an entry there, right above that high into that order block. Inside this inversion, we've already had a body close below it. See right there? That's the turn. Back to here now. Abs, how you doing, my friend? Tech. TK, I'm fine. Sir, how are you doing today? Yesterday, I was so happy that I did not take a trade at the morning price. Action was nuts. Yes, it was. Yes, it was. It was a bit crazy there yesterday, and it's not looking so good today. And after Biden's speech last night, there might be some volatility in the market, I think. I know the Republicans are going to be going crazy over this speech last night. Nobody would have thought you could have got yourself into so much hot water from one speech that took all of 2 minutes to potentially cause a lot of damage. So right now I want to see this order block hold and roll over and come back down. Just getting warmed up. Yeah, drinking water today. I had a 90-minute massage yesterday, so massages get a lot of toxins out of your tissues. And you usually, for a couple of days afterwards, you can feel quite low and lumpy. So I was really exhausted this morning. So you can drink lots of water, help flush out the toxins that they end up digging out of you during a massage. So we'll see how it affects the old price action today. Okay, so they're bopping around there. I expected to see a little more of a run back. Mind you, we're just running back to this order block here between these two right now. We just validated that guy. I want to see this candle hold price for the day, ideally. And then I guess the line in the sand for me today might be here. That's the roof. The roof is on fire. So all these little probes down here, we're waiting for some a time to stimulate a release of the algo. I think we're just marking time here now till opening bell. Then we start shifting things around, or next 4 minutes. I don't know, where are we sitting at? 7, 8, 9:30. So they've already had the 8:30 news embargo. That was that sudden shoot up right here. Tracement down. So I'm kind of hoping that was made the high of the day. We can start to dig down now. We'll see what we get if we get below here. Look for these inversions to start holding price. I want this thing to become the big breaker now on the hourly. Tyree, how you doing, my friend? Welcome, welcome. What time is it over there in Zimbabwe right now? Okay, let's go through some of these here. I'm suspicious of this. I don't trust this. Return to here and then shoot off. I'm thinking this is going to degrade, get below here, and we're still going to continue down. Yes, note that. That's my suspicion for today, that this consolidation won't hold price if we just get a return back into here and then continue back down. Let's look at This will all kind of hinge on New York Open for Dow. So these guys are up to. Banging off the hourly and the daily fair value gap. Inside this breaker right now. Return to these equal highs right here. We see that dip into here and either continue up to the upside. So that will be potentially the down day today. For Forex pairs. What do we got down here? There's lots of liquidity down here. Back inside that one we'd marked a few days ago, or last week I should say. We've come through it, come back into it, finding support at it. Now we could run down into these lows here. Yeah, I think we're gunning for this stuff next. We're into that breaker again, so we're finding some resistance off of it. We're really between that breaker. Make it a little bigger here. This breaker here and mean threshold of that candle. I think we've rose above it. Yep. So we're right here and here right now between those two. Oops. What's this? How do I have so many damn E-mini S&Ps again? So there's an inversion right here. That means we could work the bottom half of this daily fair value gap some more, finish that off. Now that we've hit this breaker, roll over, come back down. So we see downside for that, not upside. Canadian dollar around the highs, back to the mean threshold. We're still inside that daily fair value gap there. That's inversion. Boy, they're really working that zone there in the Canadian dollar. Aussie dollar still bouncing off the breaker. Gonna work this candle here now, and that becomes an inversion right here, from there to there. Look for this to provide a level of support right there to there. There's a little pocket of liquidity over here in the Japanese yen. I'm trying to give you a quick analysis on this, so take it with a grain of salt. I'm not really spending a lot of time on this. I'm just trying to do some quick, a quick peek at it. So, if you want me to spend more time in these charts, if you're interested in those, then let me know and I'll see what I can get some time. I'll come in there and have a look for you, but I'm just doing some quick things to look for. We're back up in here again. So keep your eye on the daily fair value, weekly fair value gap again. Find some support on that. Do a roll over and come back down into here. Some more upside on oil. That would have been a nice entry there this morning. Break this little high here. Bold candle, come back right inside it here, right to the body, and then leave. That's oil consolidation. So if we see just a return to here, this candle, its body, and you bounce off of that, look for a run below here, come back to it, find some support at it. So you're kind of looking for a run, this thing to give up a ghost. If we get 50% of this run down here, it's inside this consolidation, so there's not much of a leg that takes out that low, and it's more wick than body. So that's why I'm suspicious that that high is not gonna hold. I don't think this is gonna hold here. I think we're going to roll over and come back in here somewhere inside this candle. Probably right off the body here or in here. I'm going to put a line there just so I'm kind of looking at some stuff here. Somewhere inside, on or near that candle. My friend Furba is probably asking about gold. And gold, I still see gold coming down. We're still inside that daily inversion fair value gap right now. We've still got some imbalance left in here at $20 or $2,030. There's also a BISI here still available at $2,028. And then we're looking at price imbalance down here. So I think the draw on the liquidity is on the downside. We have lows, BISI, imbalance, equal lows, inversion. So it feels more heavy to me. We've had the order block opened here, managed here, supported, and now we're losing. So you want to see this one kind of give way now, come back into it, and start working these lower time frames. Sorry, lower PD rays in the discount range. All right. Okay, well, looks like we did bust through that. Good. All right. Tyree says it's 14:08. We're at 14:18, so we're at 16:18, 4 o'clock. 4 p.m. in the evening. Oh, so you've got a kind of a nice time then there, Tyree. You know, you don't have to be up too early. You can be trading London around dinner time. You could be trading New York open. That's a nice time for you to trade there. You're not in any extreme. Maybe we'll come stay in Zimbabwe for a while. It must be in a good time zone for the alignment for London and New York. Yeah, you'd be perfect. Right in the middle of your day. Bright-eyed, bushy-tailed, ready to deal with it. I like it. That's what I'm saying. Morning. would you mind doing a breakdown for me on how you approach your trading session? What things do you look for first, and what setup are you looking for, and when do you enter? Yes, we can do Forex. I trade Forex in London session. Oh, awesome. So basically I do an overall perspective. I'll start looking at the daily, similar to what Michael does. He will look at the daily, kind of give you an overview. The weekly, you check the weekly and the monthly on the weekends, and then you look at the daily, overall daily, and say, where are we inside a range that everything I talk about on the 1 minute chart, I look for exactly the same thing on the daily chart. Nothing changes there. It just makes me decide if this was a daily chart, that I would be like, okay, we're expecting a huge down candle day today. And if I am, then I'm thinking, great, when can I get in? Where's the wick? Did the wick in London make the high? And if it did, then what am I coming back to? Am I coming back to an Asian session? There's a bunch of different things I look for that optimum time at 10 o'clock to catch the silver bullet and say, is this going to be the bottom of an hour or the top of the hour? It's kind of hard to codify what it is that I kind of go through. My mind just is constantly going through multiple different approaches, but overall I'll look at the day, get an idea where the bias is going to be. If I can't get a bias off the day, then I'll go down to the 4 hour and then the hourly and get a bias off the day from the hourly. And I've got a time candle counter theory that I use for helping me manage the hours. And then I've got a candle counting theory. Obviously you've been watching me do it here. I'll say, okay, I'm expecting a turn to occur at this time. All right, these two are going to argue for a while here. All right, I expect it's going to turn right here. You'll hear me talking about that, Tyree. The more you hang out here, you'll hear me give you more times that I'm expecting this little turn to occur. And then I use the minutes on a turn, the hours on a turn, on a bias of a day. And I'll look for a setup. I'll either look for the leg that takes out a consolidation and we break below it. That leg, I'll put out three lines on that. I'll put out the midpoint of the leg that takes out the high. I'll take the consolidation high to low. I'll take the high and then the midpoint of that. And those will be my three either entries or my line in the sand. Order blocks are line in the sand for me on the minutes. The time is, and that all that can change just by breaking through an inversion, fair value gap. Then I just toss that all out the window and start a whole new theory. My plan has to be flexible. And if I marry it, that's when I find myself running into the biggest problems. I can carry this all the way up saying, oh, it's going to turn, it's going to turn, it's going to turn. And before you know it, the day is done and I've been married to the idea that I'm going to catch a reversal instead of the main momentum. And a lot of times you'll see me just stay here in a 1 minute chart and I'll just read a 1 minute chart, and you can haul out enough handles out of a 1 minute chart without being too distracted by everything else that's going above you. If you can read this and you can play this in all of its consolidation and all of its little ranges and stuff, and you have an objective where you're reaching for on the higher time frame, then it becomes numerous, your entries. You look for a premium array and you get short off of a premium array if we're aiming for a discount array on a higher time frame. Because if you think these were all 1 minute candles, if I was expecting this to go from premium to discount and this is the only discount array inside a consolidation, I'd be like, sweet, we can get into here at the top of this, which we just did, mean threshold and the bodies here, and you're on a 1 minute chart, and that's your hourly objective, is to aim for here, look for a premium, jump on it, aim for here. It's a simple idea. Test it out. Here's the place to try it. Get your demo account. And that's what we do. You'll see me take experiments on trades and completely blow it. But that's how you try to expand your skill set. Try new things. Or stick to one that you're absolutely confident with and roll with it. Wait for your setup. Here's the toughest part about being in this community. Everybody has their own unique setup. And when you see them all jumping in and they're going to make big handles, how does that affect you psychologically? Right? How does it hit you? Like you say, "Oh, damn, I should be on this." Because if you feel the pressure of making a trade because everybody else is making money and it's not your setup, you're not ready to do any major trading. You're being influenced by everybody else, and you can't. You really have to be very rigid in your thinking, because when all those people are gone, you're left with your idea. And if you get rattled by every little thing that comes along, then you're going to blow accounts, man. You're just going to totally blow accounts. You've got to find your strategy. Doesn't matter if everybody else is on their own little tear. They're jumping on there. They're saying, "Hey, I made this, I made that." That's great. I'm all happy for you. But was it the trade plan that you set up? Or did you just pile on what you thought everybody else was doing? That's discipline, man. You gotta get disciplined. You gotta find your trade setup, and plan your trade your plan. So there's your hour. We're aiming for this discount array. We're in there now. We didn't quite get, I was looking up here for a nice premium. Didn't get it. Oh well. We didn't even get back to, barely didn't even get back to here. So once we had a body break this inversion here, right here, we didn't even trade back into it. We just left. But higher time frame, there's your objective. Equal highs. That would be my first one. Then the bodies, then the fill, and then we'll see if this leg here, if this is just the run up to make the high, take all those people in thinking the price is going to shoot up, then drop down and take these guys out, which I think it's going to do. That was all based on 830. And I was looking for 855, so we're probably going to get 855 today. I'm hoping for a nice big run down today, but 855 is my first line of my first objective. Good morning, Lori. How you doing, my friend? Good morning. Sold NASDAQ at 903. Consolidation, break in, come back to it, right off there, inside that inversion or inside that fair value gap. Yeah, that's good. That's pretty ballsy considering you're still in a consolidation at that point, unless you looked at that small little one there as the consolidation. That's ballsy, man. Good for you. But that order block there is a definite key off. As you can see how the mean threshold holds that price really well. And you're in a beautiful run down there this morning. Good for you. Way to go, Lori. Morning, Derek. I hope it's helpful, Tyree. Sorry, I can be a bit scrambled in my ADHD thinking. My mind's always going like 100 miles an hour. I'm trying to take in many, many things, but I think that's just all the years of being in EMS. You're going to come into a scene and You got to analyze it and see 100 different things going on at once and then make a decision. Like now, you have to take in a lot of stuff. And I love reading ECG strips. I love, you take a heart, pop it on a 15 lead, and look at 15 different views of the heart. 12 leads, all really cool. And you look at the back of the heart, the front of the heart. It can tell you what arteries are being affected, and it's neat. That's back when I was a useful part of society. Now I'm sitting here in my pajamas staring at screens. What's my life become? All right, so we're digging into this here. So now we're definitely in a discount array. Do we find support off this thing, or do we start to push through it, which I'm kind of hoping for? So this becomes the price leg up that takes out the highs, and then we start to work below on the hourly. So daily, you see this right here on the daily. This would be ideally where I'd like to see us aim for today. And it's doable. Like that's the high of the day. As soon as we get below that opening, if we start to turn on that opening, we start to run down, then I'm looking for here. In sections, obviously the 25, 50, 75. Equal high, one more time. That's what I'd be looking for. Watch this guy here. $17,913. Interesting. Mean threshold right here. Get short right there. I'm going to wait for silver bullet. We could get a pullback into here. Mean threshold, we're going to watch this mean threshold. Yeah, starting to give way. So if we end up we drive up into a premium array here. I like this order block here. I like this this inversion. We'll see what this how big a retracement we get here. And then I'm looking for 8 o'clock. Sorry, 8 o'clock New York time. Sorry, 8 o'clock my time. Not New York time, 10 o'clock New York time. See, I told you my brain's all scrambled from all this toxins they massaged out of me yesterday. I need to drink more water. Okay. Let me get my brain straight here. All we have is, oh, they're all done already. Is it the unemployment rate for Canada is out at 8:30. That's already done already. So we're through here. Find support here. Push up some more. Look for retracement back into here. We'll see how well this holds price. See how we have a body already blew through this. We've come back. We've tapped it right here. So it feels like more upside for me right now. So we'll see what's going on here. Those of you guys who are short, you're about to get some nibbling into your profits. We'll see how far you get nibbled. The cheese, the mice are after your cheese. So that's my point right there, Tyree. You see that there's some people that have got in. They have logical places that they've made their trades. Now, if you just pile in on that for no reason, if you got onto that and you heard TK saying that this was a great place, he's already in up here, and you think I should be in on that too, and you jump in on it for no reason, and now we have this retracement. We don't know where he scaled out all his stuff, and he has his trade plan. That's great. You know, and if you pile onto that just because everybody else is doing it, it's that sentiment crap that you might as well just go buy stocks and listen to all your friends tell you what stocks to buy, because you're jumping on sentiment. And if you find that motivation to hit that button because everybody else is piling on, you're not ready to trade professionally. You're just not. You're of your own worst enemy. Trust me, I've done. I feel like I sound like Michael. I've done it. I've lost thousands of dollars chasing price, literally chasing that candle going up and down, up and down. Do not settle for anything but a premium price that you want to offload at a discount. If you're buying at a discount, nothing feels worse than to enter in here and see that retracement right back up inside a range. You go, oh my God, what have I done? I'm totally in the wrong side of this range, and now I have to either weather this entire range here and if I'm wrong and it blows through, then I've lost a ton of profit. And I got in way too soon. There was nothing down here that would warrant me getting shorter. You see that? You want to see some support off of that. The moment it blew through it, you go, eek, start getting nervous about that. You blew through your inversion with a body, a nice firm body, not like a little tip. That was all the way through. Came back, tagged it. Now we're looking for a higher run back into this consolidation here and this range right here. Back to a breaker. Last down close candle before I run above this little high here. So the potential's to run there. It's to the midpoint here. I don't know about that. You'd have to go to a higher time frame to see if that was the price leg that took out that high. Yeah, that whole candle. Take 50% of that candle as your upside line in the sand for, I think that was from there to there. Okay, I'll do this. And I could be wrong, man. Don't take everything I say for the gospel, because I could be talking out of my ass. What do I know? I'm just trying to figure it out myself along the way. Aha. Aha, ha, ha. Look at that. Right on the top of the 1 minute inversion. So we could pull that thing all the way up into there for a short. We take out these highs. You'd still be in this inversion one more time. So that consolidation, does it hold? So that is that inversion hold, or are we heading back into here? And that little tiny bit of premium array. Good for you, TK, for $300 of profit. Yeah, Tyree feels my pain. We're brothers in similar pain, my friend. We felt the pain before. I've literally taken price and I've chased that candle. Literally going, okay, it's going up now. I gotta buy it. And then when it turns out, oh, I gotta sell it. I'm out. I'm wrong. I thought the candles would be truthful and honest and give me the real direction they want to go. I thought, well, look, they're going up, so that's what it's doing. Oh no, it's not. It's coming back down now. I didn't know anything about ranges. It took me years to calm my brain down. I was trying to take in way too much stuff. So now it seemed a lot clearer. 50% for a run up. Or, oh, wait a second. Sorry. Breaker. Look at that. That little candle right there. Last down close candle. We've got this little swing point here. Oh no, it's not. That's the wick there. I guess that would be over here. That whole run up. This would be the parent one here. Anyway, you're inside a consolidation for sure. So that could be it. You might have your turn right there. We'll see. I see this is this inversion. We'll see if it holds here and here. The reason I look at that is because I look at this and say, from an inversion perspective, how many inversions do I have in here? Just one. Where is it sitting? Mean threshold. Or sorry, equilibrium. I use that word interchangeably, so I'll let you know that now. Equilibrium, mean threshold, consequent encroachment. I mean the same thing. The midpoint. Here's your range. So if we just come back into that midpoint right there, let's pull the fib tool there. Because that's the only thing that's really got to provide support on to go up or drive this and to come down. There's no like premium array, discount array that you can play in other than the order blocks, obviously. So there's 50% there, still sitting inside that inversion. So there's the discount side of it is right there, a small little tiny piece. So that's why you figure there's more upside. Again, that may not even be a legitimate way of identifying that there was more upside there. I just looked at it and went, yeah, there's nothing down here or up here. So yeah, I could see it coming back into that one more time, because that's the only thing in there really of power. These order blocks, yeah, sure, they're definitely powerful, but Anything that's going to give you lift is these things, these inversions or fair value gaps. They really, really do work well. So looking for that objective we talked about over here and that guy there. And you've hit that guy there right now. So objective one hit, look for there, and then the magic bus. We'll see if that one holds. If that comes right up to there, I'm going to short right there. Stop loss will be right up here. And again, that's more of a trial. I don't expect any of you to try to do that. Whatever your trading plan is, stick with your trading plan. I usually look for the buy or sell model, but my entries are so terrible most of the times, so I'm hoping to learn that here. Yeah, look for your logical entry has to be in a place that supports your overall trade. So look for the finer details like the inversion, fair value gaps, and that kind of stuff. Okay, so now we've blown through here. We're up in here. I hope my buddy Laurie got some profits off down here. So I'm looking for right there, that 50%. Or close to. So take these highs and turtle soup them here. That's just an idea I've got. Do not trade the same trade as me unless that's your idea and you've been looking at that at the same time I have. So I'll watch it come up there, take these out, wait for an order block to confirm that that was the turn, and then you can get short there. This isn't about picking the high perfectly. I just want to, that's where I'd ideally want to pick a perfect trade in or around that 50% of that leg, which is right on the fair value gap inversion. So there's some confluences there, but I don't want to look for reasons to marry this trade, right? We've come back up into that area we talked about. Perfect fill, done. So now you wait for, do we have a quick wick up into this 50? Run that high, look for inversion, support off this inversion here now. So maybe come up here, come back down, tap it, and then continue down. How's that? Or is this it here? If we just come back to that order block, fill that fair value gap from a premium perspective. Just look at your ranges, you guys. This is no different than trading consolidation, right? And if we're going to consolidate a market, you want to look for a premium array that you're willing to buy in, put your stop loss way enough above the consolidation that supports that level. If you see the body, if you put it up here, that's fine. If you see a body break that high, instantly get out. And I mean on a close, because again, that's my rule, is if a body breaks that high, then we're still going higher. So now this is the wake up. You want to see that push right into here now. Yeah, stop losses, Tyree. I totally. Oh my God! I don't know how many times I've missed some beautiful trades because of a stop loss. I've had my stop losses way too tight. Okay, so where this closes right now is important. So here's our 50. If we close through this, then I was wrong. We're looking for higher prices. I'm looking at inversions over here now. This, I want to see it close there now. We got 24 seconds to decide what it wants to do. And if we close below here, the wicks do the damage. Don't forget. And those of you who are saying, oh, you was wrong, it went through. Wait for the close. Wait for the close. I don't mind being wrong, but wait for the close. 6 seconds. There we go. Now we're above it. Okay, so I was wrong. This is the line in the sand. That's the 50% of the wick on the daily. All right, so I'm definitely offside there. We'll see where this one closes now. This was just a nice little rundown into consolidation again on the hourly. Oh yeah, we called that, didn't we? Coming into here. Top of the highs. Okay. I was looking for lower prices. Okay, so ditch my idea here. This one here now returns to here. Nice, beautiful reaction off that in the hourly. Now, how does it work here? There's the 50%. We've closed below it. Now I'm waiting. This could be up. This could be down now. If we run through this, come back, we go back to the original idea. Let's see if this one runs through here. Come back and tap it. Or does this just come here, support off the order block and push higher? See, if you can argue both sides, stay the hell out of it. So you have a silver bullet this way or silver bullet that way? Which one do you want to take? Oh, it hasn't. That's not a silver bullet yet. Sorry. I apologize. We're starting to form one here. So I would like to have seen one come here, form off of this side of it, then get short there. I would have been a lot more confident about getting short off of that inversion than being in this side right at 1 o'clock or at 10 o'clock here with a potential. Is it this one going higher, or are we creating this one and going shorter? I think that's the range that we're looking for a short. I'd like to see it just roll over here now and come back down. And let's take a short there. Oh, that's a buy. That's a short. Oops. So I'm only going by the fact that we have this fair value gap right here. All around this area, this idea of building off of this 50% of the leg. We didn't get a blow through that. We had a fair value gap here. We closed below it. Then we traded back into it. I thought, idea would be right there off that inversion. Still inside here. Come back, find some support inside it. If we get a body that breaks above this, again, I'll close that before it hits that. But that's the support. We had a body close below it right here. I thought if I'd take the premium portion of that inversion and literally trip me in right on that inversion. 1 minute. So I want to see that hold now, and I want to see this start to eat through here. Obviously, I don't want to see it just bounce off of that order block here. Allow it. It can come all the way up into here because there's a little piece that's left, and that order block is part of a premium array now. If it wants to play in there, that's fine. But I do not want to see a body get through here. There's rejection block. $25% of that wick then is the last choice I have to make to get out. You want to see weakness in 25% of that wick. We'll see what this one closes. If it closes above, then I will try to get out as close to my entry as I can. There. Ugh. I was kind of hoping that would come back there a little bit for me to get out. Looking at 50% of that wick again. Now I don't want to see this get taken, otherwise I'm out. That's that 50% of that. I'm going to stick up there. I'll take the loss. It's above it already. It's already above my order block. Could have taken that last little bit of hope to get through there. Yeah, I'm out. Right off that 50% again. You see that? That's that mean threshold. It's got me wondering, is that mean threshold going to hold again? I'm closing out right on break even. It's too unstable for me right now. It's not following my rule. So thank God I got back out right at my entry point. So now I'll wait. And this is when Derek says, you should have stayed in. This is when it's going to run now. But yeah, it's not doing what I wanted it to do, right? That's my rule. Got to stick with your rule. Kind of look for a place to offload your bad position. We'll see if that all this doubt about this whole 50% line holds. So I gotta lose this order block, come back and find support here. The original idea now. That's okay if it takes off on me. I gotta stick with my rule. Hopefully you can see that. I'm a one trade a day guy. Smart. So basically we've got this order block here now and that guy there. Inversion. Inversion, inversion, inversion. Yeah, it's just too many of them. Wait for the... Yeah, this is going to go short. That feels short to me. I'll try this one more time up there. I'm going by a different thing here. I'm going by time. I could have got in right there. I'm waiting for obviously the top of that version one more time. Yeah, forget it. I'm not. Too much. It's consolidation. I'm gonna wait. I'm between here and here. It's ridiculous for me to just freestyle off of that there. That could be the silver bullet for me right there at the 12-minute. And now roll over and come back down. It's right inside there now, so boop. Perfect. So does this now roll over and just start hammering down. I want to see this just start getting some legs here now. There you go. Start pushing, pushing, pushing. Where's my carrot? Bring my carrot over here. Let's put my carrot down here, give it some motivation. See that wick? I want to see this thing just go now. That's why I hate consolidations, trying to pick your silver bullet inside a consolidation. That candle right there, I wanted to see that start breaking below this low, start getting a little more confident with it. But nope, we're back up into that order block. You shouldn't be revisiting this thing here. So rejection. So you see how this order block's now been validated, and the only order block above us that's discount is this guy, and we're eating through him already. So now you got to start going back over to this guy and that mean threshold again. Mean threshold of that candle. So if you were going for that guy, your stop loss is there, you would have been taken. That's why I like that one. That one there was pivotal. When it hit it, you want to see it start to really drive away, and if it wasn't, then you're back into the 1 minute. 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 1 your consolidation. Break that high, the mean threshold there. Let's close above it. We have more upside. Now you got the rejection block up here. On the hourly candle, what do we got up there? $75% of that. Let's have a look at this. There's 50 there. 75. We're already through the rejection block. Oops. What's that thing there? We've already through 50% of that leg, so that tells me there's more upside. If we lose 50% of the leg that takes out the highs, and we come back through 50% of that leg, then we have more upside. So we're aiming for the highs now. We're in the opposite direction. Not going lower. Not for the short term anyway. So when we're looking for that 50% of that leg, price leg, and it made me waffle all between the 50% of the wick and all that stuff. They're overlapping. I was trying to give it a bit of freedom to grow. But no, as soon as it starts to break through that 50%, we got a nice firm body through it. We're done. We have more upside. So consolidation now. Inversion here. Come back, find some support at this level. Here, all the way into here. So we have no more downside now until we get a break in market structure to the downside. So everything is on the upward trend right now. So look at your higher time frames for an objective you want to reach for. If you're going long, what's your higher time frame objective you're reaching for? And remember, keep your PDRAs when we're in these kind of choppy days, and it's Friday, so low leverage anyway. I'm not trading any live accounts today. And then look for your objective, low leverage, and just go into the weekend. If you're going to do a quick trade, just nibble off a little piece. Aim for a recent high as an objective. Coming back to an old high here. Reach for 50. There's 61 handles right there. That's 10 handles from there to there. right to the body. See that? So range, look for the ranges, look for the ranges, look for the PD arrays that support price. So there's your 10 handles there. Next objective is there. That's 16 handles, and then that guy up there is 21 handles. Say to yourself, are you through the mean threshold? Wecks don't count. Are you closing below it or above it? And then look for the downside candle. Look for the inversions for support. Look at the premium and discount arrays. Those are the things I'm kind of... Tyree had a good question this morning about what is it that I think. No, in NLP, we try to learn out what someone's strategy is. It's called strategy elicitation. So what you try to do is you try to figure out what it is that people, like for snipers, the original founders, Bandler, Grinder, and those two guys had Tony Robbins, and they all went down to the military, and they said, we will train your snipers and we'll bring up their skill sets to that of their elite guys. And the general didn't think that would be possible, and they sat there and negotiated these deals and so on and so forth. Anyway, they got the deal, and they went in and they did a strategy elicitation. So basically what they did is they took their number one or their best snipers, and they went through exactly everything that guy does before he takes his shot. His breathing, what he thinks about, what he's thinking about just before he pulls the trigger, what he thinks about afterwards. And they replicated, and this is all about strategy elicitation, right? So if you replicate what people do successfully over and over and over again, and you can replicate it exactly the same way they do, you should get similar results. Sounds logical, right? But trying to get somebody to elicit somebody else's strategy when you've got all your other mess going on inside your own head. So you find out what that strategy is, and then you try to replicate it. So when Tyree was asking this morning, my portion of my brain ran off and went, oh, what is it you're looking for? What is it that you do? So I'm going to try and verbalize it to you, albeit all over the place. I'm going to try and verbalize constantly what it is I'm looking for. And then up to you guys to make heads or tails out of it, I guess. So, range. What's premium? What's discount? We have a discount down here. We have a premium up here. If this range stays intact and I was going to reach for a discount to go higher, where's the 50%? What's sitting at 50%? What's sitting at a discount? What's an order block? What's an inversion? This is the inversion back here, right off the top of that order block. So if we keep this high and we start running below here, where would we typically run for inside that small little range? What's the premium? What's the discount arrays? So that's kind of like what's going in my mind right now. Wow. My wife said a good day on the way to work. She said, as I just made it to work, great, I saw 2 moose, 1 coyote, coyotes, and a deer on the way to work. This is why she totaled the car. They run out in the road. That road's so full of wildlife, it's crazy. I'm glad she's safe. Okay. Now, if we don't dig into the discount array, what starts to go through my mind? My mind says, if we don't start reaching down into a discount array, what does it tell me about price delivery? What does it tell me about the urgency of price movement? It tells me that, hey, look, if we're not even willing to come back into a 50% or in the discount range, we've got some drive. What am I aiming for now? I'm aiming for that high for sure. Because price doesn't even want to get down into a discount to continue pushing forward. It's got some momentum, right? Now, whether or not that's true, that's what goes through my mind. So we'll see if that idea holds true. You guys can just kind of work through it with me. Now, do you see how we found support off the top of the inversion? This is what I'd marked over here on that side, way back here. See that little inversion? There's the high right there. Or the high of the inversion. Look at it, ding, ding, ding. Body's respecting it. Now the wicks are respecting it. They're out of here. So it doesn't even want to get back into a nice little discount array down in here. Put your carrot up here. That's where it's headed. It's headed for that, at least 972. 972. Look for it to nibble on the carrot. It's just taking that high. Now, does it run back into a discount? It's so tight here, right? So do we keep pushing for that high back there? Order block here. These guys don't count because they're inside this big bold body here. And if that's a down close candle, look at the wick there as well. Skip through all that junk and look at the here. There's a little inversion going on here. Those are the things I look for here and say, okay, where can I find some support at that? If I was marching this up, if I had a trade on this and I was going up higher, and I was marching it higher, I would start to look for these things and say, okay, I'm going to put my stop loss here. If this thing's got momentum above here now, I want this to hold, and I'm willing to take a loss there and close my profits out right there. That's my line in the sand. So if I get a body trade below that, that breaks my rule. So then I'm out anyway. And if it rushes through and takes me, that's great. But if a body trades through here and starts to come back up, and I can nibble one more little piece out before I finally close it, I will. Again, that's just my rule of if the body breaks below. It's like when we saw here, I was getting short, and then it came back through, body broke through the other side, you're like, eek, and got out right there. Fortunately, I got out here. But that extra squeeze up was really getting me nervous, but I managed to pull it out right there back at the break even. Because now you get the consolidation. We have a body breaking through it again on the downside, come back up, find some support, then the body breaks the upside. You're like, ah, damn, I could be wrong. Problem with really tight consolidations like that is my rule ends up getting me in and out so many times. You go, is it really worth it? So you wait for a higher time frame one to get broken. There you go. So we've hit our carrot. So we've taken out that high. So far, the theory proves correct. We've just taken that high out now. So do we have a wick run on the carrot? Now, do we start running back into this range? Because now they're really discount range, right? So if you pull your fib tool from here to here, you'd say, now those are nice juicy little discounts to come back to. Now that you've run the highs here on the hourly, it'd be a great place for you to start turning around now. You've wicked up there. Start coming back down. So this is like a tweezer happening here on the old daily, right? You see these equal highs? Keep those intact and wait for tomorrow, wait for next week. Or do we just keep driving up and say, screw next week, let's just keep going? And because we're in a bullish type trend right now, and the 1 minute, you stay in that. That's the time frame I'm trading on, not over here. That's just objectives. This is the trading plan. That is the objective. Don't trade here and then go, oh no, and jump over here and go, I'm trying to trade two different plans here because this is bullish. That may be in a retracement. And or I don't know. That doesn't make sense. That wouldn't be in a retracement. Would that be in a bullish? You know what I'm saying? You can't trade on two different time frames. One's got to be your objective, one's got to be your trade pattern. If you disagree with that, let me know and prove to me why I'm really light on that idea. I just said it. Don't know if I'm really hyper committed to that idea. I think that's just because that's what I'm doing right now. Do you also trade with multiple prop firms, or do you just have one account? I have several accounts and just one prop firm right now. I have fivers. I've got a link, if you know who they are. I have a link up top in my bio section there. You can click on that. And yes, it's an affiliate marketing thing. You click on that, I get $3 if you pick the lowest one, but I don't get paid my $3 until I have $150 worth in the bank. So in other words, I'd have to have like 75 of you or something like that, 50 of you in order to get any money off them. So I don't expect to make any money off of it, but that's a link that they don't charge you monthly fees, and it's a one-time fee. You pass their 2 challenge on the high stakes trading, and if you pass 2 challenges, then they give you a live account, and then every time you increase that by 10%, they pay you 80% of what you make, and they bump you up to the next level, and they just keep bumping up your account. You can start as little as $5,000. I've got a 5 and a 60. And the 5 is more of a personal challenge. See if I can push that up into the 100 grand mark or something. I've tried Top Step, but I don't like monthly fees. If you're good, it doesn't matter, right? As people give you all those excuses. Well, if you're that good, then you don't care about monthly fees and activation fees. I do. I like somebody who says, hey, look, I support you. Give it a go. Here's a one-time fee. If you make it good, we'll support you every step along the way. And as you start doing more and more, I'll bump it up. I just like the theory behind fivers right now. I may turn around and say, nope, don't like them in the end. I haven't been paid out by them. I don't know how well they pay out. I don't know any of that other stuff yet. So right now they kind of fit in with my model of helping people. They're not out to gouge you right off the bat. So that's kind of like the way I'm going. Why I'm with them until some other prop firm comes along, has a similar type of support people, help people, instead of just out to dig into your pockets and grab your money every month. Again, that's just my idea. All right, so we're continuing up past here. Good. We have upside, further upside. Now, on the daily, you can't even go to a daily objective because the only daily objective I've got is over here now. Remember? This was the expansion that we're looking for. Now we're higher time frame. Again, this is my problem about trading is I don't trade on higher time frame objectives enough. I've been playing on the 1 minute, so I tend to look for 1 minute objectives. When we've been calling this, called this for this whole week, we've been looking for further upside prices to here, and then you imagine it making it all the way up to here, suspecting it was going to go all the way up to there, and never really ever getting in a decent trade because you're constantly battling your brain, thinking I was right, I was wrong, I was right, I was wrong, jumping back and forth between bullish and bearishness, a bullish bias, bearish bias. This is where you really have to train yourself to hold on to your higher time frame premise, and that's my weakness, is trying to hold on to, yeah, I believe I was calling this here, so why don't I continue to hold that premise that I'm constantly biased instead of trying to capture these little quick returns, retracements. My focus is more on retracements and not on the overall bullishness. There, you get to see some of my weaknesses as well. So let's get back down. Let's dig down into the trees again. So we have order block, come back, find some support, order block, break above, come back, find some support, order block, break up, come back, find some support. So we do have a continuation. But now you start saying to yourself, this is a bullish or bearish? Is this premium or discount? Do you want to jump on now? So I look for a range that's created and come back in again into a decent discount that makes sense, and then capture it for a long. So wait and see. Those of you who got long, I hope you got long. Well, where's your set? 10 o'clock. 10:01. That's a there's your 10:01. There's a silver bullet there that didn't pay off. Silver bullet here, stop loss down here. This is the one that would have worked you, and that was the 10 o'clock one. Then there's the 10:12. So do you take that one or do you take that one? That was the confusing part, right? That was the part where you're going, damn, I don't know which way to go. But if you've got your overall bias, like we saw on the daily, and you're confident that it's probably going to run up there, you have to have massive stop losses on daily objectives, though. So yeah, could have been either one of those. Then you got this guy. Oh yeah, 16, 17, 18. Forgot about that one. There's the 17, 18 into the 17, 18 candle. Forgot about that. Wasn't looking at my times. Hello, Darren. Hi, Off-Grid. How you doing? And chat, can you explain what you are seeing in these markets to classify it as low probability? Low probability or low resistance? High resistance. Well, now we're moving into a little smoother run. Right now we're starting to see order blocks finding supporting structure. Here's your range, small little swing point, back to order block discount. So order block here. I want to see this start to really lift off now on the daily perspective. So the hourly, what have we really got on the hourly now is do we come back, find some support at this old high here, create a fair value gap. What I'd like to see now is just this, create a fair value gap here. Next hour, make a small little hour, but I want to see this candle stay bold above this high. If this one closes above this high and we come back and tag that high, leaving this open, that becomes a little breakaway for me for continuation on the upside on the hour. That's what I'm looking for over there. So you probably can't get in on anything until we get a return to here. So see what that next hour is. So you got 1 hour, 2 hours. So the next 2 hours are 8 to 10. So just before lunch or after lunch, come back, take out whatever lows form in here, back to this old high. Look for this. If we get a continuation and then it rolls over, comes back, tags this, and then continues higher. But I have to see a candle close above that. Like a nice body above that would be nice. from an overall perspective of the markets, it's obviously definitely bullish for a while. This is what I just talked about on the hourly, is what I want to see right here. See that? We have a bold candle that breaks that high that I'm looking at on the hourly. That candle is the next hour, come down, create that fair value gap. This one would be tap that fair value gap and go, which is kind of like what we were looking for today. It didn't happen. It just took off and kept going. That's fine. We did get our flat candle yesterday, but we did not get what I was hoping for, at least a run down into 50% of that wick. So I was looking at the wick, and then I was looking at the body here. We didn't get any of that stuff. So we're heading higher. So at lunchtime, that's like a lunchtime candle. We're here right now, or we're here right now. So you want to see this one? No, this was one we're sitting on right now. So we want to see this one close. That's now's candle. That's an hour from now's candle. And lunchtime candle, come down, tag it, and leave. So I'm doing the same principle again on that hourly candle I was just looking at. That's my theory as I look for the daily here. If that was a 1 minute candle, I'd be doing the same thing. I'd be looking for that eventually to come back down, tag that old high one more time, or that fair value gap. But now that we've got a big lift like this, you're just looking for fair value gap to form, come in, even if it, sorry, this is what we're looking for here. It didn't happen. That's what we're looking for at lunch hour. But if we get the same kind of thing happen, I want to see a fair value gap form here, come back, tag that, leave that open, or come back into 50% of that wick over the next week. So Monday, I want to see Monday's candle form a small candle like this kind of guy again. Tuesday, dip into it, into here. Tuesday making the low and then running higher. How's that? That's what I want. That's ideally what I'd like to see. If that makes any sense to you guys. Same kind of market in S&P is, I want the same thing to happen down there. I guess it could come down to there. So I want to see that dip back into there before going higher. Anywhere inside that range. Yeah, I don't use, I can't give you any read on fundamentals. I'm nowhere near that kind of level that Michael's at. I don't look at fundamental stuff. I am purely a technical guy. I was brought up with Michael's concepts, and that's all I know. I got friends of mine that dig into fundamentals and look for who's the president of a company and how well they did in the previous companies they worked for, and that's noise for me. Way too much noise. Way too much noise for me to deal with. I'm not saying it's wrong, just not for me. So I can't give you a Darren's overall market perspective. I just go, that's where I think it's going. That's where I think it's going. I gave you my logic behind it. We'll see. We'll see over the next few weeks or months to see if I was right. It doesn't really matter if I'm right. I just want to make sure that we're still matching the order blocks to get up there. That's just an overall wish list based on a projection that it could reach for. And just because we see this big candle going, ooh, it's heading there, that could turn into quite easily turn into a wick and come all the way back down. So you want to see these equal highs here provide a level of support. So now that we broke that high with a body, and we've had a small little fair value gap in there, that's all bonus for me. I like that. I want to see that be the breakaway gap now. I don't want to see it trade back into it. I just want to see it leave it. Just keep going, start marching up, and leave that open. Now, if you've got enough data to look back in time on the daily, is there anything way back there? Let's go to the monthly. No, it's going back 24 years. We're completely in a whole new realm of excitement here. And you all know why I got that on the weekly. I did this as a leg projection from there to there. And I just projected it up to here. Like, that's a beautiful price leg on a weekly. To me, that's just stellar, golden, hello, we're heading here. On a weekly basis. So that's another 2,000 handles. 2,000 handles to go. This looks really, really good to me. See what I mean? Do they work? Damn right they do. Do price legs work? Hello. So now, again, the sad thing is, if it reaches that 2,000 and all we got out of it was a couple of handles here and there because we kept doubting ourselves, playing the wrong side of it, if that's the objective, it's just hard to believe in that when you get days where big weak down candles start to really throw you off your game. So if you're trading these long, remember Michael's mega trade video. If you don't know his mega trade video, I'm sure he's posted it because it was in the mentorship in 2016. So review the mega trades, and if you find an opportunity to get long on that, capture it, do your mega trade plan with the 21-day, follow 40 days behind, then 21 days behind, and then as it gets closer to your objective, start pulling it in tighter. And if it hits your objective, get the hell out and be happy with what you got. 2,000 handles. I don't know about you guys. I'd be kind of chuffed about a 2,000 handle run. Chuffed. That's what we say in England. Chuffed. I look back and see my 4-hour projection from January 1809. Well, you're about to hit that, my friend. You're about to hit that. 2 standard deviations, actually not 4. So we'll be interested to see if it gets there in NQ today. That will call the end of my day. Nothing is moving better than ES was a bit earlier anyway. Let's get Derek's. Where is the stick? The carrot. We'll put it up here. Derek's projection for 2 standard deviations from a 4-hour. I'm rooting for you, Derek. Oof, I'm chilly here today. Dow is doing its own thing. Don't like the fact that they aren't together, at least positive together or negative together, but one up the other. Doesn't suit me as well as high probability trading. Yeah. Like a standard, your SMT. You'll not hear me call SMT a heck of a lot. It's not something it's definitely a good thing. I don't look at it enough. I don't look at it enough, to be honest with you. So everything's positive. See, we haven't broken any downside stuff. We just keep breaking new highs, breaking new highs, breaking new highs. We haven't broken any lows yet on the downside. So let's hope that let me move that right up into there. So if we have a big down candle, like an impulse leg down with a fair value gap, looking for breakers, all those kind of things, then those are the potential. Hey, are we changing direction? Have we peaked for the day on Friday? Are we going to peak in the afternoon and then we're traced back into 25% of the range? Like you imagine this as being a TGIF Friday. If we end up peaking around 2 o'clock and then just driving back for 20% to 30% of the weekly range, jeepers, that'll be a big dive down. That'll be a crazy dive down. Oh yeah, just a projection, not a prediction. That's for sure. Not in these markets. So, sorry, he's not predicting that. He's just projecting that. I'm going to make that clear. Thank you, Derek. Thank you, thank you. Posted a chart on the Telegram page. Nice. Thank you, thank you. Premium discount, small range. Reacting off that. Now, does it hold it, or do we just start driving through it? There's the mean threshold. Not good the more you eat through it. If you don't see a nice kick off of it and you start seeing it sit like that, flat, then that's the thing you go, that's not a good sign. You want to see it tap it. When you're watching these candles, watch it tap it and kick off of it. If it kicks off really hard and fast and you see it coming back, then it's just coming back to a data point and moving higher. If it comes down, stops on it or bounces on it, or if you see it, especially these like 5-minute, 15-minute candles that come down and they just bopping like this, you think, okay, you're on the PD array, like on the last line in the sand, and it's bopping on it like that, just going up and down, up and down. Oh, you see it go like this, up a little bit, back down. Then that's just, to me, that's just building momentum, and then you're going to see it drive through. If it's not kicking off of that thing and returning, start getting nervous. And when it stops flat like that, below your mean threshold, then you think that's going for rejection, and then potentially the lows. So look at that high here. Sorry, that high. This would be the low. See how it tagged it? Instantly popped off of it. Start coming back down again. So getting back into the wick. Tap the wick. Either push higher. Get into here. Sorry, this guy here, because this guy's inside him. There's a little imbalances up here. You got equal highs. And as soon as you see this, start training your eye to look at that and go, that one's now valid. You want to see this one hold price. Ideally, you want to see a body get above it. Always think a body's got to get above the candles for you to start getting excited about whether or not that PD array may or may not hold price. But wicks do work, so as soon as it's valid, the high, the mean threshold are valid places for data to reach for. So there you go. There's your midpoint. And now start pushing for higher in here. Order block inside that guy there. Mean threshold puts you right on the body here. There's your imbalance. Now you want to see it continue pushing through that. Go, go, go. There you go. Lifting up above. You're into rejection block again. This could turn over now, come back to this order block. What time are we looking at? 5900. Yeah. This should make a high. A swing point, I should say. You're in that consolidation now, so you think about premium and discounts over and over again. What arrays support price, what ones don't. So this would be like a fair value gap. Now I look at this and I go, see how it's bopping around here, not really doing a heck of a lot. Unless it guns it down, and we're seeing a fair value gap. Pop in the fair value gap, use that as support. Go higher. Premium, discount, small little range. See that thing here? The only thing left is this order block down here. That's already up in that range. So yeah, again, you're back to asking yourself, do I just tap on this and take off? Which means I don't want to get back to this order block. I don't care about discount. I've got intentions of driving higher. Or am I just going to roll around in this fair value gap here, come back into that order block? Premium discount, that's up in the premium level. That might be right near midpoint. Let's have a look. Let's stop speculating and have a look. Let's see, it's already pushed higher. So had that been there, So the next 2 minutes, you should see a swing. Well, you get one there, here. So this could be a swing candle. There's your big figure level, 1800 or 18,000. So see how that wasn't 50% of the range? We came back into 25% of it, and it said, that's all I needed. I got intentions of going higher. I don't even care about the 50% of that little tiny range that we were looking at right there before that candle was formed. And it's not a range, because that candle has to finish below that low or below that high there. So scrap exactly what I just said. That's a propulsion. We're starting to break out. We want to see this find support off of here, push higher. Yeah, we did not get a swing point there. We got a swing point here. You remember, the swing points I call for, you can also get them on the opposite side. So when I'm telling you about a time where you can get a, I expect a swing, I was biased to go short there, when actually it was saying, no, I'm making my swing point here. Order block. Breaker. So, you know, that order block's right inside that breaker there too. So now you can see how this is a nice little discount array. You see that? If this range now, that candle closes down in here, and we come back up, find some support at it, you're looking at where would be a discount array in there now. Now you pull your fib tool. So you constantly look for how these things are forming as they start to form. Now again, I'm jumping the gun again like I did here. You have to wait for that one to finish closing. If that becomes the range, then you say, what's a discount array? There's 50% there. That would be a nice little discount array. So if you're looking at 62% retracement, right now a little tiny imbalance. So that would be a fill here. So this is all in discount now. See how we have a premium array here and a discount array over here. Now we've got a little swing point that's formed. So now I would take this and make this my prediction and say, if you're going to go long on this, you want it to come down to a discount array. Get you back on track again. If you're on the wrong side of this, for example, and you want to get back in, that's the area you're looking for. So let's just see if that works. And because we're trying to read price action minute by minute here, this is the kind of things that I like to practice. Doesn't mean you have to, but this is the kind of thing I like to practice to see if I get any validity off this stuff. So there's the breaker. Does the wick do the damage? Does the body trade inside that breaker still? And we still ignore the 50%, and we still have intentions of pushing higher. We don't want to come all the way down into this discount range like before. We're just constantly looking for pushing up higher, and this, we don't come back to a discount array because our intention is to drive higher. Well, we'll find support off the breaker, which you see how we get that. I was telling you about when it comes down and taps it and just rips off away from it. That's the kind of thing you want to see. Some real sensitivity off this level here. And you want to see that mean threshold give way and then start pushing higher. So that's a nice little wick candle there. I like seeing that. Now if we just come up into sweeping the high again, we've got that new range again, and you look back, are we still going to have that 50%, 62%? Here's a nice little optimum. Oh, shitballs. I didn't see that. Here I am talking about 50%. I wasn't talking about. I'm going to show you, just so I'm not, I missed it. I missed it. Maybe you guys saw it. I missed it. Breaker. Let me remove the breaker here for a second. What do we come back to? Discount area. We talk about those little PD rates from 1 year. So your inversions. This guy here, we blew all the way through the with a wick, whipped right down into that discount one, and then ran higher. Didn't see that. That's the support off the inversion. Let me get rid of this. You'll see it clearer when I remove this. See that? Found support at the inversion. Sorry, not inversion, just the fair value gap. Not an inversion, just a fair value gap. Came back, tapped it, and left. Still respecting that breaker. Just wick through it a little bit. Little mohawk on there. Imbalance, order blocks, validated. All right. Three more, Derek, and you've got your projection. Tried shorting it. Yeah, going against the grain. You gotta stay long on that for now. Like I say, nothing's really supporting taking out any lows here, right? And you can lose a freaking fistful of cash trying to catch retracements. Stay in the stronger side of the market, which is the bull side of it, than trying to catch a retracement. You can catch retracements really well, but if that's your strategy, hone that skill. I get caught a lot of times trying to catch retracements when I'm going, well, the bullish side of this is long. Why am I trying to capture these little retracements? And I can catch some of them, but stay on the bull side. That's the higher probability side, right? So let's look at our fib tool now for the bigger range from here to here. 50%. See how we're kicking, come back right at it, and then rip off. Then we come back down, tippy tappy again. If it starts to hang down here, then look for a rundown in here. Order block, body. Does this create a fair value gap now? We want to get below this low. We want to start seeing lows get taken out if we've got a reversal happening. Ideally, I'd want to see this, a significant body, not just like little wicks. I want to see a significant body swing point get broken to the downside, and with a really boisterous candle. There's a little imbalance right in here. Right there. Hold on that, create a fair value gap, pop in here. This would have been nice to see this break this low, then that would have been a breaker with a fair value gap. Nice little run for a short, but it's not. It's filling most of that in, and we haven't taken that low. Now if this creates a big bold booker down here, and we start getting through here and coming back up into that little tiny pocket inside that fair value gap, breaker inside a fair value gap, ooh, that'll be dandy. We just want to see a body shoot down in here now. Technically, we've already got a swing point there, so nah, not looking good. Mean threshold already. That's a fill. We're really not pushing down into there's any discounts. We're just gonna keep pushing higher. Stay long, my friends. Stay long. Oh, I'm looking at your chart here now on the 4 hour here, Derek. Thank you for that. Yeah, I see your projection. Yeah, good call. Good eye, man. Very nice. Hearts for yours. Hearts for yours. I like it. Thank you for that, Derek. Thank you. So think about your PD arrays right now. Just think about where they are. You have no upside PD array. It's been run. And it's on a downward candle. And you had a downward candle. You have no upward bullish order blocks to run off of. So you've got nothing. Except bearish, bearish. So what does that tell you? You've got bull run. You got this thing's extending. It's making new... it's going to make new PD arrays because you've got no more bull candles to play off of anywhere, except maybe back in 20 something. But I think this is the highest it's been forever. So we're literally at a historical moment here. There's no more bull candles to reach for. There's no more bullish PD arrays. That's it right there. That's the upside PD array. So until we break a bull candles low, we don't have a bull candle to play off of right now. Look at that, right back to the imbalance. We're inside this candle. That one is valid because we broke above it. We haven't broken below here or here. We're here. There's nothing. Kind of an interesting moment in history. You're witnessing the birth of a new bullish candle. A new bullish PD array up here somewhere. Other than that thing, off of a bull candle, that is. We have no more bull candles that are valid for us to play off of. Above us that we can run up to, is what I'm saying. We've hit the top. Pretty close anyway, whether it hits it on the money or not. I am a full believer in you, Derek. I have faith, my friend. Don't you remember that from the movie Fright Night? See that? My brain just tears off. You have to have faith, Mr. Vincent, for that to work on me. And he's holding his little cross in front of the vampire. And he closes his eyes and he thinks deeply, I guess I do believe it. And then he starts to melt. See how my brain, that's the problem of having a ADHD brain. You're literally all over the place, flashing back and forth. I have faith. I have faith in you, Derek. Try to shut the ending pretty close. Hopefully helpful in making these projections. Yeah. Tyree, thank you for today. I got to go now. See you on Monday. Hope we all have a good weekend next week. See you. Cheers. Okay. Take care, Tyree, man. All the best to you, my friend. Have a safe weekend. We'll see you on Monday. Finally, we have a new bull candle to play off of. See that? Let's bump this guy up. Boop. Just a little bit more. There's our 50%. Now we're going to start getting our discounts. We're starting to cut through a candle here and here. We want some bold candles sticking and gluing down here. If we got a turn point, if Derek's projection on the run is just short of it by 2 handles or 1.5 handles. Actually, what is that? Yeah, 1.5 handles. Again, we want a body, not wicks. So you dip right into the 62%. Hello, discount array. Discount array. Are we going to fill? And then you look at this last. So if that's the discount array, not that we're trying to predict the low, but if you're on a run back into a range, then logical place for it to reach back for in terms of a discount is down here. Order block, mean threshold is the line in the sand here. There's the 70% ultimate trade entry. We're back to this order block. There's nothing else in here other than the mean threshold. If we lose that 79% retracement, which happens to line up right on that mean threshold right there, now this is looking good. This is looking better now. See that? Now we have a 2-minute breaker inside a fair value gap with a body that breaks these lows. And it's in a premium array now. If this is a short, the low end and that's the high end, premium array. Right? If I do from here to here, you'll see with there's 50% right there. 62% or more is up there if I flip that around. 62% puts you right there. So we broke through this 1 minute fair value with a body. See that? Nice. Now I'm okay with that. Running back up into a premium, then coming back through this candle, working it, and then driving lower. 8 dedicated people looking at the old times, looking at candle by candle. Does this help you with your daily trading? Does this help you to get a better idea about your biases? If you're looking at every minute candle and watching how they form, if we know this is fractal, then here's the 62%. So we're back to breaker. That's a breaker right there. Last down close candle before run above a high. We don't get 62. But we do come back to the breaker. The body of the candle is respecting the breaker's body. If we do pop up in here, that would be a nice little short potentially. Right there. Now I want to see that big kick off of that come all the way back down. You don't want to see a hover in here. I'll start making a bear candle. There you go. Start running down. So now, ideally, you would want to see that body close above this. So your stop loss would be up here somewhere. There's no reason for it to go through the mean threshold of this again. So stop loss would be like really tight on this thing. And you want to see that just turn around and start coming back down. And it's a 21 candle too, so we should see a spin. Right into that imbalance right there. See that? Right there. Tap into it. Now, are we going to go through it? Again, watch the body. You want to see a body stay below here. You got 9 seconds left to see what happens. We traded above. Look at that. Traded above. Just barely closed above. But that's a rule. Now I'd get out there. Just because it traded above it. That's that little tiny rule. Get out. You saved yourself your entry there. If it turns around and goes all the way back down, then so be it. Wait for another entry. That would be my rule right there. So you just broke even, unless you're holding on for your fingernails. Lambo, how you doing, my friend? Good to see you. Okay, now we want to see this order block hold price. See that? Tap it. Now go, go, go. You want to see it leave town now. There you go. Now again, if it starts ripping through that, and I got out in my imaginary trade right there at 62%, and it popped above, and it's like, well, as soon as it comes back to it, get out. So you got out there. That's only because the body just closed above, and it was again inside that little inversion. You may have wanted to put that as your safety margin. Oh, they're double inversions right there, or double imbalances. That's interesting. Held right on that. I'm still working on that little refinement rule about body breaking above. As soon as it gets above, I'm out. And that one's just barely tapping. This is the second time this week that's happened to me now. Barely gets above on a close. It could go higher. I'm going to try and come up with a rule for barely or just slightly above. Look for the PD array that supports it. Give it some wick and wait. We'll see if this order block holds now. My stop loss would definitely be moved from up there to here. I wouldn't want to see that revisit. Now that we've got a body below it, now you want to see right on the top there. You don't want to see it come back up here again. So that inversion should hold now. We're waiting for this inversion to hold. Now we're getting a body trade below it. There you go. Good. Now that one, now I'd move my stop loss to right more than break even. I would move it to in profits. I don't want to see that one get revisited now. We're still in that order block. It's been validated. We've got the mean threshold. Now we've got the body. Now I wouldn't want that to come anywhere near that. This is a potential inversion. So now I want to see a body get below the 1 minute one now. See this provide a level of support up to here. You don't want to see bodies getting through that. Wicks can do their thing. They're just coming back to order blocks here. Tail, body. You want to see that close below that. There you go. So you want to see how that reaction off of that is a nice significant wick, and it starts to whip down. Now you want to see that body start driving down some more. You want to get below here now. Now if we do get a body running below here and through that mean threshold, then I would move my stop loss to that candle's high. That inversion there. Be one inversion above you. Because they're always the premium arrays, right? So there's that potential premium revisit. There you go. We've got a body getting below it now. Beautiful. So I would have got out there. Somebody else took that and stayed in. You're off to the races now. And we saw this happening right here. We saw this 62% retracement, these little tiny inversion, or these little tiny imbalances right here, potentially holding price And that little thing right there, my rule, popped me out there. That's okay. I'm all right with that. Now, because I was wrong, you could get back in again when you find support at the inversion. So it came back through, a body came through, proved it again, came back inside it right here. You could get short there again from that point. If I said, I'm wrong. Oh, maybe I'm right. I'll go below here again. Come back into it. But again, consolidations can beat you up in there. This was a price leg back into here, so this made total sense of a nice little retracement back. Looking for being done. That one's finished. Further down now. Body breaks below, comes back in, finds some support right at the order block. I love it. Continuation on the downside. We've taken this low, so now we're starting to get that break in market structure now, right? We have break in structure to the downside, come back 62%, find a support, break down, below structure, break again in market structure. We're starting to see this drive down. Wait for this premium discount array swing point to occur. Look for an array up there that would support a 62% or 50% retracement, whether it be here or on this side or order blocks, and then look for a new objective further down. Hopefully you see that kind of pattern. I kind of keep running it in my mind over and over and over again, looking for those objects, and you can see we can get pretty freaking accurate with it. So, and always keep reaching for the most recent low and pay yourself at rejection blocks and pay yourself at the swing points, because you may be just running liquidity and coming all the way back into a range again for consolidation. Consolidations are a right hook to the noggin. Right to the noggin.
Hey Darren, it's just a question for you. We're just looking at this thing. So I got all the mounting points for the straps. So I put these two on the top for a handle. I was thinking, what if I put two more on the bottom? Would your mom ever wear this as like a mini backpack? If I put two more on the bottom, I can include an extra strap, and then she could use this as like a mini backpack too. Just a thought. Let me know. Hey Darren, it's just a question.
This guy's awesome. Again, pull your fib tool. Run your pattern. Fib tool. What's 50%? What's sitting in there? What's 62%? What's up in here that would provide support in that optimum trade entry level? If there's nothing up there of any significance for you, there's an inversion right here at 62%. So from a premium array, I would be looking up here saying, I wouldn't want to see it break through that. I want to see at best 62% and then bounce off of that. 50% would be nicer if you're short and you're running your stop loss behind this. If you haven't paid yourself and you're trying to run the back end, then you want to make sure that you look for potential places. You say, no, if it breaks that, I'm out. I'll take my little bit of profit and kick myself because I should have paid myself at the other arrays, because we're in a consolidated area here. So you got to pay yourself quick. Otherwise, you're just going to nibble a little bit of profit at a time. And if it doesn't reach the 50% and keeps driving, that's a good indication that, hey man, I don't plan on letting anybody catch this. I'm driving down now. I want to get this down even further. So that's a good sign. We just came back into that fair value gap, filled it, and left. Gap, gap, gap. This is all a good sign that we have a potential turn occurring on the 1 minute that you don't see on a 1 hour, and we haven't even seen it on a 5 minute yet. We've just had a couple of wicks break here, but we don't have a body breaking below any of those. But on the 1 minute, it's already tipping its hat for us right there. We caught that at the 62%. That's tipping its hat that we're potentially running for a break-in structure. That's a nice break-in structure here. Not a really strong break-in structure here. We want to see a body push through here now. Otherwise, this could be just the wicks. I want to see a body push through here hard, come back, find some support at these old wicks, and continue pushing forward. If that 50 hasn't been hit and we get this waffling here, we could get another big drive back up into what's here. Other than that little inversion right there. Keep that inversion in mind if this one doesn't hold, which it's so far it's holding. Right on the money on that one. Now we got another fair value gap here. Look at the range. It's in a premium, so we can come all the way back up, fill right there. Inside that inversion now, and you want to see it continue on the downside. So you constantly look for these inversions, look for the ranges, look for the premium and discount inversions inside those things. These imbalances as well, they're all key levels that you'll be able to trace back on in hindsight to see that they provided a level of support. Now, you don't have to get all of them. You just have to start looking and saying, what do I notice in this price action about these imbalances, these price imbalances? Do they provide support? What happens inside that little swing point here and this swing point here, premium discount? Do we come back into I'm going to pull this here so you can see it right there, 50%. See that? I'm pulling it from here to there. While that candle was forming, it ran up into 50% inside the fair value gap, and I just made a new low. That's why you got to look for these things, and believe me, you'll see them. They'll become very clear after a while. And now we've got, this has really tipped its hat that we're turning in a different direction. Hourly hasn't even, all it's doing is just a retracement back into a fair value gap. So if you're trading on that time frame, you don't even know that the market's already turned already from this perspective. Again, this may be just a short-term run all the way back into filling this, but you can see that already run back into this by that break in structures that we're seeing here now. Now I'm in a bearish idea, not a bullish trend. I'm in a bearish trend because now you're seeing these things find support at key levels. So whoever's bearish or bullish here, down on the 1 minute, you're bearish. And that may change, again, if we start to see market structure break to the upside. Well, hopefully that makes sense to you guys. So you want to see it just roll over here. Looking at that range from there to there. Premium array, discount array. Is that a discount array or not? Premium discount. Just barely in the discount range. So that's all premium up there. That's the problem when you have a big ass candle like this, which we've just validated. They're literally overlapping themselves now. that guy there, and that big candle right there. The only arrays you got left in this guy is high, open, mean threshold. So you want this to create a little fair value gap in here now. So you can have a slightly discount array here and a premium one up here. We've come all the way back up inside that guy right there. Optimum trade entry, 75%. Now you want to see that, just book it. If that doesn't create a fair value gap there now, you want to see that really book through if it's not aiming to fill this. So you wait and see right now, because you're in a premium. If you're trying to pick the tops, you could be wrong. But you want to see this provide support here. You just wicked up into the middle of it, 75%, which is also the mean threshold. Consequent encroachment of that SIBI. Does it hold? Are we creating another fair value gap here? You're waffling between, you're in a premium zone. This whole thing is a premium zone up here. Discounts right here of that whole range. So, and that's inside the order block. So are we finding this as a support here now, starting to push back up? Because it's all premium arrays here. Yeah, see, it's all premium array stuff. There's nothing really on the discount except that little piece right there. So now it's going to extend up. We're breaking structure here with a wick. Are we just running into liquidity again? Watch that candle's body has to close above there. See how we just wicked up? We're getting a reaction off of that just to catch out any of these trailing stop losses that are following us. We have to have the body here close below this. Then you start going, changing my perspective, because now they haven't given us a lot of discount arrays to play with. They've just built up a shift. There's a lot more premium arrays to play in. And if we push through that candle, see, now we get a body close above it. So now shift. We have a wick above and we have a body break above here. So this is potentially a low. I go back into that huge range now and I look for premium discount arrays in a bigger range. And you look for this guy here to provide a level of support in there. And you do rinse and repeat all over again. We've got a body through this one as well. When that one closes, order block up here. Body. If it gets through three of them, then you're looking for further upside. But just that right there was the tip that we broke. Oh, I didn't even notice this one here. Here's the fair value gap. Sorry. You can tell I'm getting late in the day. We have a swing point here. We have a body breaking above the fair value gap. We come back, we find support at the fair value gap. We didn't draw this one out. Come back, push through, body breaks through that one. Further confirmation for upside run. You're into order block. So there's the big breaker right there. So breaker to breaker. So you got this guy here to this guy here now. So expect that to come back into this range before taking that high out. Okay, Abs, take care, my friend. We'll see you again on Monday. I'm almost done as well. 10 o'clock. Everybody reading this, don't forget to give Darren thumbs up. You all have a good weekend. Thanks, Babs. Take care, buddy. Stay safe. Enjoy your family. Tapping into busy. You'd want to see a discount array reaching for first before blowing through this mean threshold. What are we sitting in here? Are we sitting in any side? There's a tiny one here. There's one here. We're inside that guy. We're above that one. It's definitely more upside, but I want to see if that comes back into old high here. Which is not a really discount array inside here. Yeah, we'll stick with 50, 62%. So 50's way down here. Wow. We have a little fair value gap there. There's no swing point there. Let's see if this guy here holds price. If that holds price, that is way more bullish than running all the way back down into here. This is way more bullish to take that mean threshold and push it higher. If we're inside this consolidation, we're already in a premium array already. Like the higher, if we go to the highest high right there, see 50% is over here. And we're definitely in the premium portion of that whole range here. The mean threshold hasn't been hit yet. And there's really nothing in there except for this guy right there. Wick side to side. Don't know. Let's just see where it goes. Got the mean threshold. Can pop up there. Running out this little consolidation. Pop up to here. Come back down. Run this into here. And then you really got to get a deep run down into that 1 minute one again. And dig all the way into the bottom of it if you want to get a big discount array. And if you just go breaker to breaker, then this little piece way down here, you can't discount that either. If that just goes to mean threshold, look for mean threshold here as well. So if we go mean threshold right there, 75%, there to there. If it hits that. Yeah, I'll watch this last few minutes and then I'm shutting her down. And we'll get a bearing on the weekend. Check the Telegram page. If you haven't signed up already, you can join the Telegram page. The link is in the bio above. And I'll pop some stuff on there. Derek usually puts something in there on the weekends as well. So you can see our perspective on what we think next week's going to do. You'll pull some fib tools and do some projections. I want to keep in mind that upside objective still, because we're still long on the dailies. So if we can come back to something that supports price and then continues up next week, I'm all for that. We're down to 7 diehards. It's Friday. You don't want to put any more leverage anymore in the markets anyway. would adjust things to be less, what are we aiming for? Mean threshold of that candle? There's nothing there. Oh, right there. Let's see. Mean threshold's right there. I'll stick with the mean threshold of that up close candle. That 50% pulls us right into something a little more feasible for a discount array. And if I'm wrong, then we still got further upside. Retail saying, but this was a bull flag, Darren. You didn't see that? That's fine. If you can come back and find support on that and push through, great. There's your mean threshold. If it blows through that, then your little fair value gap, return inside that for further upside. Forget about all this mess here until later, until you get a break above that high. Then look for a retracement back into potentially this range that's taking out that high there. But we saw the emphasis I want to tell you is when you look at these fair value gaps and you break to the upside, come back and find support at them, that's an indication that the algo's changing its mind. And then when you get another blow through this guy here, you get confirmation off of that, and you have a break above a high with a body, then you go, yeah, there's definitely more upside. So those are my indicators for what I think you start to see a break in structure. What you guys may have your own. I know Michael's got some. Yours might be more firm with, if I get a body above this high, like this, now I'm happy with it. If I get a return to that old high, I can go long on that. If I don't, then I missed it. Maybe it's the bodies, not the wicks. Maybe you say, well, when it returns to the wicks and it's in the discount range, I'll take that. Comes back into it, find support. Mean threshold. Old high. And we were talking about that while that was happening. Bull flag, can't you see that? Yep. When it returns to it, take it long. Again, you're in a premium now. Do you want to take it long? You better be starting to nibble some profits off at these rejection blocks. Or just let it run. But you're paying a premium price to get a little bit more, hopefully higher premium price. Which, hey, if you're looking at getting in there, it's 96 to 106. That's 10 handles right there. And we get Derek's valid. I'm going to validate Derek's 1809. See, when we saw these break-in market structures, we said, okay, we've got downside. I'm bearish now. We're bearish until we, and you'll go back through the tape, you'll hear me talking about it. We're bearish until we're proven otherwise. And here's where your proof starts to come in. Your validation. Breaking these these fair value gaps on the upside with bodies. You go, okay, and now if you have a body break that high, we do. Now you've got to give up the idea that we're going lower for Are we going higher? And when you're in a consolidation and that's happening all the time, you can see why you can get a left hook to the temple, then a right hook to the temple. You're going to get banged around inside there. So you've got to be really nimble when you're looking at these things to try and grab your premium discount or raise and get out as quick as you can till you see a smoother run. So remember I was mentioning about rejection blocks. You better have some out. Look at that, right to the rejection block. And if you didn't take some out, now you're eating up your profits again. And if you got in here, now you're underwater. And if you didn't take a piece out there, that's why you got to be super nimble. Everybody wants to go for the long bomb all the time. Sometimes you just want to get, I'm going to get there, get out there, or here, pay myself, move to break even. If it comes back, I got a little piece off there. That's it. Everything else broke even. Now you're running these lows, looking for a discount inside here now. And what kind of discounts have you got? You got this guy here, and you got this guy right here. Order block, now valid. Inversion, traded below it. Again, reverse direction. We've got an inversion that's happening in here. You've got a little fair value gap. You come back up, you're tapping it inside an order block. Roll over now, come back down. Reach for these lows, equal lows here. You're inside this little fair value gap again here. If this one closes above here, it's a small little swing point. That's a premium piece up there to run down and extend that range again. So, top of the fair value gap, the inversion, hit the top of it again, close below it, continuation. Darren's crazies. $55, 58 now. Next 5 minutes, it just does it's like the squabbling sisters. We're gonna get one of these guys is gonna start doing the. Or we just call it the squabblers. We won't say it's sisters. We don't have to put it as women. We're not gonna be a misogynist or anything like that. We're just saying, hey, look, we got some squabbling and some candles here. Let's not personify them. Bang, right off of that. Am I reacting? Watch how it's reacting off of it. Watch how it's reacting off the mean threshold. Order block. And you still got that one up there. You're popping into it now. Where does this close now? We can pop right into that, which is the fill of that. We're sitting at mean threshold. Sorry, consequent encroachment. And watch again how it reacts off it. If it just sits there, see how it's just hanging there like that? That's going, I got more intentions of going up. You want to see it bang, take off. The fact that it's now popped, see that again? Like we had over here somewhere. We have a little tiny close above. Or we have a close above this little guy here. So do we let it roll into here and say that's the support I wanted to give? Or do you say, oh no, I'm out now. It's going to go higher. Small little rule, but does it again support me or does it deny me? So here's where you do a little more research on it. And it supports me. Right now it supports me because if we start reaching up into here and here, that's a definite close above now. Above here. You want to see this array here, whole price now. You see how that's a premium and this is discount down here? That's fat in the middle. You're consolidating, so now you got to look at this one and this one. See how they're literally overlapping one another? The wicks are overlapping, the bodies are almost touching. So now you're going, okay, what arrays can I bounce off of here? In here, back in here, and mean threshold of this candle, mean threshold of that candle, old high, fair value gap. Welcome to consolidation. Now you got to go rejection block to rejection block, or mean threshold. You've gone from mean threshold here, you want to go to mean threshold here. Or you'll hang around just below the 50% range, which is inside that inversion now. And we're looking for, is this compressing, or are we running out of PD arrays now? There's that midpoint. You want to see it expand either to the downside. See how it just kind of popped over that mean threshold, popped over it. See where that sits in the next few seconds. Now you're banging around between mean to mean, like to like. That's what you got to look for in consolidations. A like array to a like array. So when you saw that hit that, you go, okay, well, the next one is sitting in here. So it popped it. Now you want to see, all I got left is that guy there. And now I've got to expand either lower, or I got to come back up into that guy one more time, which is now the inversion, because we got a body that traded below it. So I go, oh, okay, now you can come back up into here. That's great. Mean threshold will be fine. And I want to see this extend down now, because we got lots of liquidity sitting down here, and we've got some decent arrays for offerings down here. If you'd like to purchase our offerings in our discount boutique, we have them down here for you, sir. And he says, well, why not? Let's see what you have in your bargain basement. And it starts to head down there. It's almost like you could tell a story with these candles. Darren's craziness is right. Hopefully you see some logic in my nutsiness. And with that, my friends, our bargain basement sale comes to an end. I think I'm done for today. Just look for the point we were talking about this whole consolidation in here, and you saw how it was hitting the array after array. Then we're expecting it to extend beyond, and it does. You're down into a discount area. Look at your larger range now and start looking for logic that supports a run below here into a discount, right? It seems like a logical place. If you're going to extend this array, where would I go to? Well, a discount array inside that big range you're sitting inside. Well, what's next? It's 50%. Well, what's sitting at 50%? Well, there's a big old fair value gap. Bissy sitting right there. Great. Now can I find support? Is it broken with a body below here? Rinse and repeat. Come back up to the old lows. Hit it. Good. Now roll over and keep coming. Or I'll look at that range there and start saying, what up here is a premium? What's a discount? Is there a breaker inside of fair value gap? Can I get short on that? Is there a breaker here? No, it's a mitigation. There's a small, tiny swing there. I'd say no. Mitigation. I'm just mitigating off this and then starting to go short again. There's a little tiny fair value gap sitting right there. In that range, is that a premium discount? Again, I know this is very time consuming and very probably boring to some of you guys, but that, if you want to know what my process is, that's what I look at. And for my little OCD, ADHD brain, I love this. It's just bringing in lots of things I'm constantly looking for, referring to. There's 50% of that little range back here. If they just pop above that into that little SIBI there, 62% puts you inside that little fair value gap. Inversion right here. I'll even move this guy over here for you, just in case. Boof, there's 62%. Let's remove that. Right in the mean threshold. Sorry, consequent encroachment. Look at the reaction. Do you see that? Slam back like that. Pull back. I love it. Now you want to see that body not break that high, because that's in a premium area and there's a risk of starting to run back up again. And it didn't. So that's good. Now we wait for the next one. Do we have a new range starting up here at a logical time? Which it is. It's a logical time for a turn. If you know your times, if you're noting the times that I've told you in the past, you'll look for them. The 58s, the double zeros, the 2, 7, the squabblers, now look for more discount. Hopefully you see the logic in what I see, and hopefully I'm making it clear enough that you can understand what it is to look for, especially in consolidations. I know, Derek, you were talking about I should make a video on trading consolidation, so I kind of hope that I've explained that a bit today. I should probably spend some time actually making a small video on trading consolidations. I always think that if I'm trying to teach something, I do not want to violate Michael's trust and his the fact that I respect what he's done. I do not want to make anything about me. I just want to make it about his stuff and helping people move forward. Hopefully you can understand my rationale behind what it is I'm looking for. So basically we're looking for that big discount run in there, right? Now you filled this. That's good. It's stabbed down into the order block. That is a decent return on your range. So I do like the boutique offerings we have down here. That is also brings us back to a midpoint. There's a small little tiny imbalance back here as well. So again, is this creating a small little spin point? I expect a spin point to occur in here somewhere the next couple of minutes, and then the squabblers will decide who's going to make the low. Kind of look at those, and I'm out of here. That's it for me. It got me in the discount, which is pretty much I want to drop the mic on a good note, saying it hit their objective. I always want to end a Friday on a good day, on a good note, and not going into the weekend going, no idea what the hell was going on there. Even despite all this mess, all this crap, we're still calling it clean, logical areas. So hopefully if you enjoyed it, you're new, hit the subscribe button. I don't mind whoring myself out for likes and subscribers. If you guys can learn something from it, it moves you forward a bit more, or makes things a little clearer, then I'm blessed. I'm grateful. But until then, I will see you guys on the weekend. Kirk, thanks again for turning up. Derek, Abs, Lambo, TK, all you guys, thanks very much for turning up, and we will see you again on Monday. Derek, if you want to get together on chat on Telegram or whatever, we can come up with some ideas of what we're going to do for next week. And your other guys are invited too. You'll meet us on Telegram there, and we'll kind of get some ideas of what we're going to do for how we're going to trade next week. All right. Until then, love you guys. Awesome fun. And I will see you again on Monday. Come on down here. Go on, just pop down here into the boutique and look at our wonderful sales we have available at our special low prices. Maybe the carrot. All you need is the carrot. Delicious and nutritious. And Derek, you're going to get your run up here after lunch, I think. You might get to take that out, pop that up, and then start running back down into the TGIF Fridays. That would be a great place to close. Pop up into here, get your 2, and then start running back into the range created on the week. 2 o'clock. Yeah. Anyway, we'll see on Monday whether or not the carrot was taken, if the boutique offered enough sales, enough tantalizing undergarments for those who are interested. Anyway, look for that. Look for the carrot. And then if you lose the mean threshold here, look for further downside prices and the retracement in. If we do get a pop back up in here at lunchtime, look for Derek's projection. That would be just enough to take that high out and then start running back down into TGIF Fridays. But until Monday, I'm out of here.